All right, good morning, ladies and gentlemen. Good afternoon, good day, depending on wherever you are watching me from. Yes, I promised to drop the analysis of the analysis of the shot that of the screenshot that I dropped in my group yesterday, and about four shots were analyzed yesterday and dropped in my group chat. Yeah, this is I think this is my group chat. This is yeah, this is my group chat starting from the started from volatility 25, and I predicted that the pairs is going to go bullish as I did yesterday, and which happened. Up to now is still bullish. So I want to let you know, I want to analyze, I want to demonstrate how I did my analysis, how I arrived at the conclusion that this bullish movement is going to be possible. I'm doing this for you to understand the smart money concept of of uh, of my of my price action. So let's go to the chart. Let's go to the chart. Sorry, about 2025. So, as you all know, I am a day trader, and once I start my analysis, I always start it from my day from day one down to day four. So, in the day one, I saw that this bearish movement has been happening for many days, and at this point, it has done a very good retracement, and now coming back down to to the support, trying to form a double bottom. But that is not my point of interest. So this is day one. Having known this, I go back to my 4 hours. And what happened at my 4 hours? In my 4 hours, when I change my when I change my my screen to this, I'll be able to see it very far from a from a very long from a very wide perspective. I see that there was what I call a bullish order block, which is where I started drawing my rectangle, triangle, this gray spot that you are seeing. And how do I determine this? How do I come across this? How do I come to term with this kind of decision or this kind of statement? It is because this bearish movement has printed several retracements about three places, and those retracements have already been mitigated because anywhere there's a retracement, there is a settlement of there is availability of liquidity, and those liquidity have been taken. So now that the liquidity have been taken down and the market came down to the previous support where the retracement began. So I got to know that I got to realize that yes, the same movement, the same bullish movement that happened from this bullish retracement from this bullish order block will still happen. So what did I do? I drew the signal and told them that okay, I'm expecting a bullish movement for today. So now let's go back to let's go back to 15 minute time frame or 1 hour time frame. What happened in the 1 hour time frame? Well, when it got to the 1 hour time frame, there was no significant setup that will trigger my action. I went back I went back to my 15 minutes. 15 minutes also was not giving me good setup. To 1 minute to 5 minutes, still I could not get a good setup. Then I went back to my 1 minute. I take I take trade from whether 15 minutes, 5 minutes, and 1 minute. But I hardly take trade on 1 hour or 30 minutes. No, no, no. Because I don't like any unfriendly kind of a drawdown in my trade. I hate drawdown. I hate to see reds. I hate seeing red. Okay, look at what happened here now. Look at if I were on this, if I was monitoring this pair yesterday, I would have taken my trade from here. I would have taken my trade from this point. Let me draw it. Okay. I would have taken my trade from this point. I would have taken my trade from this point. Why do I say this? Because, excuse me. Why do I say this? Why do I say this? Because the same retracement that happened in the 4 hour that I told you that time has happened here. It has happened here. The liquidity has been taken from here. The liquidity has been taken from here. The liquidity has been taken from here. Sorry. The liquidity was taken from here. Excuse me. Excuse me. The liquidity was taken from here. The liquidity has been taken from here. So what we then do? Liquidity has been taken from here. So then what do? We wait for a break of this, for a change of character. Since the liquidity has been taken from here, we wait for a change of character. Change of character has to happen here, this point, this point. Had it been, I see this candle printing above this and come down, either a change of character or or a breaker block to happen. What do I mean by breaker block? Excuse me. What do I mean by breaker block? A change of character does not happen. It does not happen. But why I consider this trade a very valid trade was that since the reasonable candle had been printed here as a retracement at my point of interest. Remember, at my point of interest that I have already marked in 4 hour time frame. And seeing this double bottom here, I can boldly take this trade here. I can boldly execute my trade here, and then put my my stop loss a little bit below this swing, and I will be done. So if this trade has been taken like this that yesterday, you would have imagined that yesterday I would have been in the trade till now. I would have been in the trade till today. Look at it. Look at it. Look at the same trade here. Look at the same trade. I would have taken my profit here. So this is it for the volatility 75. Now let's go to volatility 7 to the volatility 10, where I took a trade yesterday. Volatility 10. In the volatility 10, the analysis that I gave yesterday. Let me go back to my chart. Volatility 10. Okay, this is the volatility 10. This is the analysis that I gave. What did I say? I say if this guy print shock. What do I mean by shock? Shock is change of character. In the lower time frame, we go in for a sell, which is here. This is the direction. Okay, this is 4 hours. So let's go to the chart. 24 hours. Let's go to the chart. This is 4 hours. This is the This is the analysis that I dropped yesterday. This is the 4 hours, and it is still selling up to now. So how do I arrive at this? First, I started from my day one as my big time as my big boy time frame. How do I start? Seeing this analysis or seeing this market movement, it is obvious that this market is still bearish. Why is it bearish? Because because I think I've taken this trade yesterday, before some weeks, about 2 weeks ago. I've taken this trade from here to some point before I exited, and now it has happened that it has moved and broke this uh, this support. This is a support here. This is support. This support here. It moves and breaks this support, and having broken this support, what next is my point of interest? My point of interest now has to be within this area, because I call this particular setup as a breaker block, breaker block in a higher time frame. So where is the breaker block? Let me move this in here. This is my bullish breaker block. This breaker block, this bullish breaker block. This is my bearish breaker block. This is my bearish breaker block. Sorry. Come on. But this is my bullish breaker block. So in this bullish breaker block, it is expected that since a movement has happened like this, since this market has moved above since the market has printed or moved bullish above this particular retracement, it is expected that as soon as it get back to this place, there's supposed to be a bullish movement to the upside immediately. But that doesn't occur. That doesn't occur. And now that it does not occur, it printed below the support. It printed it below the support and retracing back into this bullish into this bullish breaker block, which would have signified another bullish movement, but it fails. It fails. This is what I'm saying. But it fails. Excuse me. But it fails. Excuse me. It fails from here. It fails from here, and then close below it, and then now retracing back into that bullish breaker block. And once you see a bullish breaker block, according to ICT smart money concept, once you see a breaker block like this, you will use the middle. You make sure you wait patiently until the movement get to a mean threshold. We call it a mean threshold. This is the middle. The middle of this is from here to here. So how do I determine this middle? Before, in order not to make any mistake, I go to my Fibonacci. I go for my Fibonacci retracement, and then do it like this. Sorry, excuse me. I go to my Fibonacci retracement. Sorry, excuse me. I go to my Fibonacci retracement. So this is my Fibonacci retracement. I allow it to print. I allow the movement to get into the 50% Fibonacci retracement, which is where this market got to before I called for a sell yesterday. Before I called for a sell yesterday. So, and how do I do that now? How do I do that? Let me go back to my 4 hours. 4 hours. The 4 hours. In fact, even before that yesterday, I have already taken this trade. about early this week or thereabout, early this week or thereabout. I've already taken this trade somewhere around here. And before it got back, before it retraced back to my to the position where I took the trade from yesterday. So now, and I dropped that if as this movement get back to this resistance, this is a strong resistance. As it get to this strong resistance, I see another breaker. I see another other block here. This is an other. This is an other block, and then followed by by the other block, followed by fair value gap. The fair value gap up here. I did not mark it. So, and I say once there is any change, when the movement print any change of character in the lower time frame, where is the lower time frame? The lower time frame that I always recommend is 15 minutes, 5 minutes, and thereabout. So I go back to my 15 minutes. What is my 15 minutes saying? That yesterday here, here. In my 15 minutes, it has printed, that, what do I call that change of character. What do I mean by change of character? Okay, look at this place. Look at this place. I consider this. I consider this. I consider this as a reasonable retracement. This red candle printed one. The second one two. As long as the candles that printed is a bit transparent. I mean a bit long or stretch. A very has a very good stretch. One, two, three. I consider this as a retracement. And haven't seen haven't seen it haven't seen this closing above this retracement here and return back to the other block. Where is this? Where is the other block? This is an other block. This is a very big other block. This is a very big other block. Very, very big other block. But still useful. Very big other block. So in this big other block, what do I do? I also use my mean threshold, which is what I use in that day one that time. My mean threshold. How do I mean by mean threshold? My mean threshold. I determine my mean threshold by using my Fibonacci retracement. Once I place my Fibonacci retracement like this, from the beginning of this to the last year, then I wait for the candlestick to print to the candlestick to reach the 50% Fibonacci retracement, where I will place myself. And this is what I did yesterday. And as immediately it got to this point, I placed myself and then brought my and then placed my stop loss above this swing that printed this bullish underblow that I'm talking about. And that was how I did, and that is what I did yesterday. And apart from that, even apart from that, let me remove some features here for you to understand. Apart from that, in the other block here, what did I saw again? I saw some other things. So I saw some other features that gave me confidence. And what are those features that gave me the confidence? The feature that gave me that confidence yesterday again. I saw this as mine as one of mine as one of my point of interest. This this uh, this bullish order block as my breaker block. I see this as my breaker block because haven't seen the excuse me, where is it? Okay. Because haven't seen this candlestick Haven't you seen this candlestick? Haven't seen this movement moving from here, sorry, moving from here, excuse me, moving from here. It broke below the the breaker order, the bullish order block, retraced back, retraced back. As soon as it got to this point, as soon as it got to this point, I have every confidence that yes, this market is going to move downward, which is to start a bearish movement. So I placed my trade within this cycle yesterday, and then placed my stop loss above this swing, and the market went well. I dropped a signal that people should sell. I don't know if anybody has picked that trade yesterday. Excuse me. I dropped a signal that people should sell. The market was just doing some kind of a shopping, or it was some kind of a movement yesterday. But I was so confident that this is going to go in my way. So I put my I put my stop loss, and then closed my system and went doing another thing. And before I knew it, the market printed down to this place, down to this place. Sorry, down to this place. I placed three orders. I closed two from here, and then the remaining one I closed it here in the midnight. That was when he hit my stop loss. So, I mean my take profit. I think I dropped it. I still dropped this thing yesterday when I wanted to go to bed. Where I drop. Where is it? Where is it? Where is it? Where is it? Okay, this is it. This is it. This is it. When I notify my community, those who take this trade must testify. This was the analysis. Every other one went well. Okay, when I wanted to go to bed around 9:29 yesterday, I just lock it and then go to bed. And as soon as I woke up, it hit take my take profit. It hit my take profit. So this is how I analyze market. Very as simple as this, and it has been very fantastic. So this is one of the analysis that I promised to drop. I will drop more as soon as I get back from my outing. I'll be going somewhere right away. So if you have any comment, please drop it on my comment box. And if you like it, please give it a like, subscribe to my channel, and encourage me to do more. Thank you.